Hi everyone, my name is Busari Abiodun. Welcome to my channel. In this video, I'm going to discuss about bank reconciliation statement. I have started discussing about this topic before. I've recorded the first part, second part, and this is the third part of the video where I will be taking an illustration on bank reconciliation statement. Just like I said, this is bank reconciliation statement. So in this video, we will be taking questions from Fadward Enterprises. As you have the illustration, the following account is the bank account of Fadward Enterprises as contained in its cash book for the month of June 2022. So if we look at it, this is the cash book, the bank balance in the cash book. If we look at the end of the period, we have balance brought down, which is 11,000 naira. Let's look at the bank statement. So under the bank statement, this is the bank statement presented by the Bank of Nigeria to Fadward Enterprises for the month of June. Let's look at it. At the end of the period, the balance in the bank statement is 1,000 naira compared to the balance we had in the cash book. Let's bring the two accounts together. Let's look at it. We have the cash book at the left side. We have the bank statement at the right side. Let's look at the balance. The balance brought down in the cash book is 11,000. Now, which means the business believe that the amount that we'll be having in bank is 11,000 naira. If we now look at the balance at the bank, we have balance of 1,000 naira, a whole 10,000 naira difference. So how are we going to do this? So we are going to prepare the adjusted cash book and bank reconciliation statement to reconcile the two accounts. So just like I explained in the earlier video, how to prepare bank reconciliation statement, where I talk about the steps involved in preparation of bank reconciliation statement. The first step is to compare the entries in the cash book with the entries in the bank statement. So let's get started. So we have the cash book and we have the bank statement. So this entry, I will be taking the debit side of the cash book first. So just like I said, like I explained in the previous video, all the check received by the business will be debited to the cash book. When such check is presented to the bank will credit the account of the business, which means all the entries at the debit side of the cash book are expected to appear at the credit side of the bank statement. So now we want to compare the two statements. So we want to look at the entries that appear in the both sides of the cash book, and we want to look at those entries that do not appear at the both sides of the cash book. So those are the entries that really cause the problem. So let's start. On June 1st, we have balance brought forward, which is 8,000 naira. If we look at the bank statement, we also have the balance brought forward, which is 8,000 naira. So we asterisk the two. So on June 7th, we have Abiodun 20,000, which means a check received from Abiodun 20,000, which is debited to the cash book. So let's look at the bank statement. June 7th, you can see we also have entries for June 7th, which is Abiodun 10,000 naira. So is 10,000 naira. So we have entry for Abiodun 10,000 naira. So on June 16th, the cash book, we have cash bank. If you are talking about cash bank, I'll explain that under the cash book, that is the money transfer to the bank, which is 15,000 naira. Let's look at June 15 under the June 16 under the bank statement. So there is entry for June 16 under the bank statement, where we have June 16 paid in cash 15,000 naira. So the next entry in the cash book is June 25, where we have Latif 25,000 naira. Latif 25,000 naira. If we look at the bank statement, there is no entry for Latif, so which means the check received from Latif is one of the causes of the disagreement between the two. Also, we have Jude on June 27. We have Jude, which is 16,000 naira. If we look at the bank statement, June 27 we are having here that's bank charges and dividend received from Judge. So it's different from what he had in the cash, which means there's no entry for Jude in the bank statement. It means Jude is also check received from Jude is also one of the causes of the disagreement. So we have identified the entries from the debit side and the from the debit side of the cash book and the credit side of the bank statement. So we have identified those entries that appeared in the two accounts and those entries that did not appear in the two accounts. So now let's go to the other side of the cash book, which is the credit side of the cash book, which is all the expenses being made by check. So which means all the check issued by the business are credited to the cash book with the hope that the money will have been deducted from the bank. So which means all credit entries in the cash book are expected to be debited to the bank statement. So we start taking these entries one after the other. On June 2nd, we have electricity, which is 2,000 naira. So electricity 2,000 naira. If we look at the bank statement, June 2nd, there is entry for electricity 2,000 naira. So we are going to asterisk that as well. On June 5th, we have Ade and Son, payment to Ade and Son, which is 10,000 naira. On June 5, if we look at the bank statement, we have check 1005 Ade and Son 10,000, which means the entries appear in the two sides. We are going to asterisk Ade and Son in the cash book. We asterisk Ade and Son in the bank statement. The next entry is June 8, where we have Dennis 6,000 naira. If let's look at the bank statement. Bank statement we also have check 1006 Dennis 6,000 naira, which means the entries appear in these two sides of the account. So that means we are going to asterisk, we are going to take Dennis 8,000 naira in the cash book, Dennis 8,000 naira in the bank statement. So on June 14, we have Wale 8,000 naira. Let's look at the bank statement. June 14, there's check 1007, which is Wale 8,000, which means Wale also appear in the two statements. So we are going to take Wale in the cash book. We also take Wale in the bank statement, which means those entries did not cause disagreement. So the next one is June 19. We have Friend 15,000 naira. So let's look at June 19 under the bank statement. So there's entries for that check 1008 rent 15,000 naira. So that means we are going to take rent in the cash book 15,000 naira, rent in the bank statement 15,000 naira. On June 22nd, we have Anthony 8,000 naira. Let's look at the bank statement. Under the bank statement, there is no entry for Anthony in the bank statement. So it means Anthony is one of the entries that caused the disagreement. So let's move on to the next entry, which is June 25. We have Ola 4,000 naira. If we look at the bank statement, we have entries for Ola, which is check 1009. Ola 4,000. That means we are going to stick Ola in the cash book, with Ola in the bank statement. So the last entry in the cash book, which is June 28th, we have Ahmed 10,000 naira. If we look at the bank statement, there's no entry for Ahmed in the bank statement. So that means that is all about the comparing the two accounts to identify the entries that appear in the two sides of the account. So now the next step is the preparation of adjusted cash book. So let's draw a T format. So adjusted cash book, we have the debit side and the credit side. Then we'll put the denomination. If it is naira, if it is dollar, we'll put it. So now let's start. So we said prepare the adjusted cash book by bringing forward the closing balance in the cash book. So we go to the cash book. Let's look at our cash book. What is the balance brought down? Which is 11,000 naira. So that balance in the cash book will be brought forward in the adjusted cash book as balance brought forward, which is 11,000 naira. So what is the next step? So add all entries that are not in the cash book but credited to the bank statement. So in this case, we are talking about all those money received by bank on behalf of the business, but that did not appear in the cash book. So just like I said, this is the credit side of the bank statement, which means all the money received by the bank on behalf of the business. So just like we explained earlier, so we are talking about all those entries, all those money entries that appear under this credit side but not in the cash book, just like we explained. So for example, if we look at it, we have Jay's Bank dividend, that is dividend received from Jay's Bank, which is 20,000. If you look at that, that is the only entry we have under this side that are not in the cash book. If there are other entries, we take all those entries and add them to the balance brought forward, that is dividend Jay's Bank, which is how much? 20,000 naira. So since we don't have any other entry, then we move on to the next step, which is subtract all entries that are not in the cash book but debited to the bank statement from the balance. So this time around, we are talking about all those payments made by bank, but not in the cash book. So just like I said, so each time the bank make payment on behalf of the business, they debit the account of the business. When business issue check, they credit the account. So this time around, we are talking about all those entries that appear under the debit side of the bank statement, not under the credit side of the cash book. So if we look at it very well, we have standing order, which is 2,000 naira. So we also have bank charges, which is on the 29th of June, which is 5,000. And those are the two entries. So we go back to our adjusted cash book because we are going to subtract that from the amount. So we are going to credit that to the adjusted cash book. We have standing order, which is 2,000 naira. So the next one, we have bank charges, 5,000 naira. So bank charges, 5,000 naira. So there's no any other entry again. So since we don't have any other entry, that is the all entry we have, we are going to close the account. If we close the two accounts, so we had the debit side together, that is going to give us 31,000. If we had the credit side together, that is going to give us 7,000, which means the debit side is greater than the credit side. So is the 21,000 that we are going to 31,000 that we are going to write at the two sides. So just like we said, the normal ledger preparation. So if we subtract 7,000 from 31,000, so the balance will be balance carried down, which is how much? 24,000. That 24,000 will be brought down as balance brought down, which is 24,000. So that is all about the adjusted cash book. It is this balance that will be taken for preparation of bank reconciliation statement. So now the next step is to now prepare bank reconciliation statement. So just like I said, so in preparation of balance reconciliation statement, the first thing is to bring forward the balance as per adjusted cash book. So bank reconciliation statement, let's put our denomination. So we bring forward balance as per adjusted cash book, which is 24,000 naira. If you remember, the balance brought down in the adjusted cash book, 24,000 naira. So we are going to bring it forward as balance as per adjusted cash book, 24,000 naira. So the next step is add unpresented check. So if you remember, I've explained that in details in my previous video. What unpresented check is, that is all those checks issued by the business but did not appear in the bank statement. That is all those entries at the credit side of the cash book but not at the debit side of the bank statement. If you remember that the adjusted cash book, we dealt with the bank statement, but under the bank reconciliation statement, we are going to deal with the cash book. So this time around, we are talking about all those expenses made by bank in the cash book, but not in the bank statement. So for example, if we look at those entries, we have Anthony, that is the check issued to Anthony, 8,000. There's no entry for that under the bank statement. So also Ahmed, which is June 28, 10,000. There's no entry for that under the bank statement. So those entries are called unpresented checks. So we have unpresented check. So the first one is what? Anthony, 8,000. We have Anthony, 8,000. The second one is what? Ahmed, check issued to Ahmed, 10,000. So we are going to have Ahmed, 10,000. 8,000 plus 10,000, that is going to give us 18,000. If we had 18,000 to 24,000, that will give us 42,000 naira. So the next step is subtract uncredited check. Just like I said earlier, if you are talking about uncredited check, we are talking about all those checks received by the business but did not appear under the credit side of the bank statement. If you know when the business received check, the cash book will be debited. When such check is tendered to the bank will credit the account of the business. So this time around, we are talking about all those debit entries in the cash book, but not under the credit side of the bank statement. So like the Latif, check received from Latif, 25,000 naira, and check received from Jude, which is 16,000. Those two checks are called uncredited checks. So which means we are going to have less uncredited check. So the first one is Latif, 25,000. So we have Latif, 25,000. So the next entry we had here is Jude, which is 16,000. So we have Jude, 16,000 naira. If we add 25,000 and 16,000 naira together, since there is no any other entry again, it is going to give us 41,000 naira. So this 41,000 naira, we are going to subtract it from 42,000 naira. It's going to give us balance of 1,000. I forgot, so the 41,000 naira should be put in bracket in account. If you want to subtract, we put the entry in bracket. So that will be 42,000 minus 41,000. That is going to give us 1,000. If we look at the 1,000 naira, it is the same thing with the balance we have under the bank statement. So that is going to be called balance as per bank statement. And so that is going to tell us if our account is correct or not, because the balance we are to arrive at is supposed to be equal to what we have under the bank statement, which is 1,000 naira. That is all about the preparation of cash book and adjusted cash book and bank reconciliation statement for this account. So for the last time, I'm still going to provide one more video under this topic where we will be treating a statement form. That is where all those errors that cause the disagreement will just be brought out without presenting the whole cash book and bank statement like this. So thank you very much for watching this video. Don't forget to subscribe to the channel, like the video, and share with others. Don't forget, you can also visit our blog, sofaaccountingtutorial.blogspot.com, or you join us on Facebook by searching for Simplification of Financial Accounting SOFA. Thank you very much once again. Don't forget to subscribe to the channel, like the video, and share it with others. Until the next lesson we'll be meeting, I said bye for now.